This is because of Smita and you both are doing well. And sir, you are established finance expert and researcher for decades. So in not only in India, but globally we have a huge dearth of finance experts. And the topic
It's
is
just pure love,
for today's discussion.
nothing else.
So the topic for today's discussion is very relevant. Post-COVID-19 dynamics of risk return. Financial sector is already and always very volatile. So this, I think, the number of uh, participants from different institutions and universities, they want to, harness their expertise in this particular domain, which is very volatile and very sensitive. And Professor Salim, like expert, you know, is like a torch bearer, having more than decades and decades experience and practical, research in that particular domain, would definitely benefit the participants, uh, uh, those who are graduating or post-graduating in management discipline, and as well as those who are uh, shaping their career as finance expert, as research scholar, or as faculty. So this webinar is useful to all the participants. Sir, I'm thankful to you on behalf of Doon University as well as on behalf of the School of Management. I extend hearty welcome to Professor Imran Salim.
Thank you, sir.
Professor, जी, Professor Imran Salim is a very renowned and acclaimed academician in the field of financial management, and his expertise especially includes human resource accounting, human resource management, financial management, project management, microfinance, Islamic finance also. So he has published several books and research papers in international, national repute journal of finance area, and guided so many dozens of more than 2 dozen research scholars in the field of finance management. Professor Salim is actively working in the field of finance for so many decades, as I have already mentioned. And he initiated his academic journey from Aligarh Muslim University, very prominent university of the country, not only of the country, but universally and globally known in the field of academics. And later he joined Jamia Hamdard as professor, head and dean of Department of Business Management. For years, couple of years, he served with Jamia Hamdard, Jamia Nagar, New Delhi. Later on, Professor Imran Salim joined as Vice Chancellor of Singhania University, Jhunjhunu, Rajasthan. So we have seen Professor Imran Salim for last more than couple of decades, and I am lucky to have his association for in academics, in research, as well as academic administration. Seen his capabilities, his caliber, and his research input in different domains. His active contribution, his significant contribution in finance area would definitely help the participants, research scholars, faculty members to shape their career in the right direction and to have the expertise, especially in the field of finance and share market, which is very volatile and sensitive. So Professor Imran Salim is visiting professor of Royal University of Bhutan. He has been associated with several institutions and universities, not only in India but abroad. He has been visiting uh, professor of Lal Bahadur Shastri National Academy of Administration, Missouri, where IAS trainees are trained. So regularly he is a visitor, and he used to deliver lectures to the uh, administrators of the country, bureaucrats of the country, how they should have and how they can be a good finance manager and finance administrator, fund manager. And beside Lal Bahadur Shastri National Academy of Administration, he has been associated with Indian Institute of Management, IIM Kasipur. He is visiting professor there, and he has been associated with number of universities in India and abroad. And today, uh, we requested Professor Salim to have his talk with the students and his faculty as well as his scholars of Doon University. And Dr. Smita is the finance faculty of our school. And before joining of Dr. Smita and Vaisali, we were not having finance faculties. So visiting faculties were involved, they were engaged to uh, conduct this specialization, which is very important. Finance is the lifeblood of any organization. Without finance, the organization cannot survive. And such an important specialization, the school was running without faculty. But thank God, after joining of Dr. Smita Tripathi and Dr. Vaishali, now we have very, you know, capable and very dedicated, committed, sincere faculties to guide the students in this direction, which is very important. Uh, Not only in India, but globally, we are having huge dearth of finance experts. And I'm sure after attending this session of Professor Imran Saleem, who is a dedicated academician, acclaimed researcher in the field of finance, financial management and finance, would definitely help our students, all the participants, to move further. This would be after the address of Professor Salim. It will be open for the participants, and I have requested Professor Imran Salim to make the session more interactive, more student friendly, participant friendly. Then it will be useful to all the participants, and they can clarify their queries or doubts whatever they have in their particular discipline. Today the topic is restricted. COVID-19, the globally global pandemic. We have to manage our market. We have to save our investment, and we have to minimize the risk which are already prevailing in the market. So how to have the risk return equilibrium, that I think and I hope Professor Salim will clarify, and he will guide us, all of us, uh, to be a good finance expert and more of a predictor of the finance market. If we can, predict, or if we can forecast, then we will be in a position to have this expertise for our future career. With these words, I thank you, Professor Ismita, for organizing this webinar and inviting Professor Imran Salim. And I thank you, Professor Imran Salim, that he accepted our invitation to interact with our students, faculty, scholars, and all the participants who have joined from different institutions of the country. With these words, uh, I hand over the session to Professor Salim, and hope this session would definitely be useful and fruitful to all the participants, faculties, and whole management fraternity, finance fraternity. Thank you, sir. Thank you very much.
Thank you, sir. I'm really honored to get this opportunity. And since, as Purohit Sahab has mentioned that we are old friends, so naturally we have met after a long gap, and therefore he had to say a few things about me. I mean, it's not very significant. But anyway, see, we will be talking about the stock market today. And I have tried to develop this talk specifically for the students, and I have absolutely tried my level best to not to make it any technical, or I have tried my level best to make it as simple as possible, so that even a common man can understand, so that a graduate or postgraduate or anybody, any student, or even a housewife can understand, who doesn't have much of exposure outside with the world. This is one thing. So I'll not be touching much of technical things. Rather, I'll be focusing on the basic wisdom and logic. That's one thing. Second thing is, okay, while I'll be talking, I'll be asking you some of the questions, and I request all of you to make it a lively interaction, as Purohit ji has asked for. I would expect responses from the chat section. All the attendees, I request either, whether yes, no, or some of the photographs I'll show, you need to indicate. But please do participate, so that each one of us, including myself, I enjoy the interaction and discussion. Third thing, before I open the discussion, I would like to flag that whatever I'm discussing here is mostly my personal own logic and analysis. I'm not advising anybody to make or not to make investment in the share market. This is very important from the point of view that I am not an expert, I am a teacher. You must understand that I am trying to visualize the situation. I have tried to flag certain issues which the post-COVID scenario and even the present scenario we are facing with. And therefore, I strongly recommend not to be influenced by the discussion. I mean, for the academic sake, you're most welcome. And if at all you are influenced, still you make a lot of analysis, interaction, and take advice from the experts from the market before making a decision. Now, my first question to you: am I audible? Is it okay? Yes or no? At least a few participants. Thank you, Vikas. Thank you, Triptas. Oh, that's great. That's great. It means I'm perfectly audible. And the more important is that ultimately I'm a teacher. So I am accustomed of speaking loud enough so that I'm audible. Thank you very much. And I'm really thoroughly impressed with the audience that you had been so good with me by responding. Second thing is there are certain participants who are responding in question and answer session. I would request them to write whatever they feel like in the chat box. Question and answer session, we will write only the questions that you want to ask, and then we will try to respond at the end. I'll open the question and answer box at the end of the discussion. First, I will simply talk, make a small presentation of 15-20 minutes, maybe a little more, and then I'll be open for the discussion. Rest assured that there are absolutely no time issue. I am available as long as you feel like. It's your choice. So I won't be bearing more than what you can really bear with me. And I would request again to please put your questions in the question and answer session. You have on your screen, two options are there: question and answer session and chat. So question and answer, please be specific to write in question and answer session, or anything else you want to write, you do write in the chat box, and I'll try to address those things. Okay, so we are talking about COVID-19 and thereafter. And I'm sure that each one of us will bear this, that it is a challenge before the humanity. It is something which nobody really forecasted, nobody even thought of. I don't think that any one of us had ever been thought of locking down completely in the house. So, I mean, it was an amazing experience, I'll say. Perhaps the nature has taught us some of the lessons also. It's not just about money. Through COVID, we had been able to learn that perhaps coming back to family is important. Perhaps we are not as important to the nature as we think for. Because if we don't respond in a very responsible way, in near future, possibly we may be weeded out by the nature itself. Nature has the capacity to restore itself and safeguard itself. Anyway, some of the experiences are there. Industry is at stake. It is absolutely a new set of dynamics, which at least our generation has not seen before, especially the younger generation has not seen it before. And therefore, it is very important that we deliberate over and again that what is the likelihood of the future. This is extremely important. And I believe that we must be carefully aware of these possibilities. And here I would like to flag certain things, certain questions, certain basic wisdom that only calls for your deliberation. And I mean, I'm trying to give you food for thought. I'm not suggesting you to enter into the market or not to enter into the market. Whatever I'm saying, it is just a personal observation, a personal feeling, the way I think if I'm an investor, how would I behave? That is the only thing, and it is therefore absolutely personal. I request once again all the attendees to please not to react on my deliberations. It is absolutely for an academic discussion, and I'll be sharing a screen of mine. Rest assured that it is not full of hordes of information. As I promised, we'll try to be very interactive, and I have tried to make my presentation a little interesting as far as the youth goes. So allow me to share the screen. Just a minute. Yes, Mr. Sam? I'm not being able to share my screen.
Just a second, sir. I need to. So, what it's saying, sir?
It is.
Okay, 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 okay. Yes, sir. Now you can share your screen, sir.
I don't think. Yes, it is done. Okay. Okay, is it visible now?
Sir, it's visible.
Okay, thank you. Now, I have written the disclaimer here also that these are my personal opinions to facilitate academic discussion only. Please don't take any action based on these discussions. Okay. Here I am, and I'll be discussing about the risk return dynamics of share market. I would just like to flag that is it the right time to enter into the market or refrain from that. So just to check out with the things. Okay. So I'm told by the organizers that I will be addressing the youth. So I have tried to manage my interaction the same way. Sam, I would still need your help because I'm not being able to see the chats now. Can I see it? Do I have the provision?
Yes, sir, you have it. Chats.
I'm not being able to see the chats.
So maybe you are sharing your screen.
That's why.
That's why you are not able to.
Okay, okay, no issues. Anyway, so I would request you to help me out when somebody says yes or no or whatever. Okay.
Yes,
so
sir.
Keep on helping me by telling the responses.
Okay, sir.
And so here it is. I am addressing the youth of basically from Uttarakhand, where I had been. I did my schooling from Nainital. I have served at Mussoorie IAS Academy. Then I am also a visiting professor at IIM Kashipur. So lots of connectivity with Uttarakhand, and I say you good morning once again before we proceed further. Anyway, my first question is that what are you looking for? Let us say maybe that very recently you will be looking for a car, for a good career, for some sports high class, some tourism, marriage, and lots of tourism and enjoyment. What are you looking at? Let me have the responses, and please, Sam, keep on reading.
Yes.
I am requesting the attendees to please list out what you are looking at.
Sir, somebody has said we are looking for a bright future.
Okay.
Then good career.
Okay.
Government job, laptop, career, clean environment, good career, and career.
Okay.
So this is.
I would request the participants to respond to these figures at least. What are you looking at?
Luxury life, and obviously some tourism.
Okay, that's great. I'm surprised. I'm surprised with the temperament of the youth. Nobody has opted for marriage. I mean, at your age, I believe. I mean, I don't know. I'll just share this. Anyway, good luck, whatever you are aspiring for. So
Married.
let me ask you another question that at this age, what is the most vital decision of your life? What do you think? Let me share it with you that had it been me in your place, I would have said that I'm aspiring for all of them. Why not to have a car? Why not to have a good wife? Why not to have a good career and lots of tourism and everything? Everything. I'm looking for almost everything. Even
There,
at this stage, I'm looking for, except marriage, of course.
there's a response. there- there's a response. If we will achieve success, we will get good girl.
Okay, that's fine. And the boy as well. I hope the girls are also there. So, but at this age, let us say what is the most vital decision of your life? Because I have opted out for not to include career because you are already working there. Now, given these options, what is the most vital decision of your life? बेटे ये on करो. Hello.
Yes, sir.
What are the responses?
Your right career path to earn good money, to do best in research work, tourism, health structure, being happy, earn money and happiness.
I'm requesting the attendees to choose from the given photographs.
To have good career for my kids,
Okay.
to
A
have
step
that,
further.
to
Good.
have that car,
Okay.
then luxury and tourism, marriage.
Let us see this. I mean, can we really see buying a car as a vital thing? I doubt. Tourism or anything could be. See, these are the consequences. Ultimately, what we are looking at is the happiness, the satisfaction.
Happy life.
And I believe that at your age, if I see the most vital decision of my life is possibly the marriage, have a good partner. I strongly believe this because then whole of your life is taken care of by someone. It is supported and nurtured by someone, be it either of the counterpart. So it is very important, I believe. But in any of these things, what you are aspiring for, there is one more thing that you are looking for. Any of these things you need to have. In any case, you need a hoard of money, lots of money. And perhaps one of the ways to make money is a stock market. I flag here, I emphasize here that your career, your hard work, all those things do matter. And of course, you can make a lot of money through that. But one of the options is also making money at the stock market that we will be discussing. Is that okay? Shall I proceed further?
Yes, sir.
Okay. Now, before having more of it, let me make a comparison of two vital things in life, which I believe is very important and interesting. You will find. For instance, if I'll take here, two things we find very vital. One is marriage, and the other one, lots of money, isn't it? And you will be surprised to note that the two have a lot of similarity. It's very interesting. When I do take my classes here, if any of my students is there in the attendees, he would endorse my point that I had been given this example to work in the share market and working on a marriage relationship is almost similar. And let us see what we look at. She or he make life better and happy for you, and you own all pluses and minuses of each other. That is there. I hope all of you would agree this. If you get a good partner, then your life becomes better and happy. Is it okay? Yes or no?
Yes, sir. Everybody's
Okay. So you look for, while going for a marriage proposal, you look for the girl or the boy. That's number one. Number two, the family and the engagement. When I say engagement means the education, the job, the related things, and the clan, the khandan, the parivar, the family background. So all those things we'll look at. Now, while taking up the share market, it makes life better and happy for you. And when you buy shares, you own pluses and minuses of the company concerned, to which you become the owner. All the assets and liabilities, you have to morally bear with that, isn't it? And in that process, what you look for is the company equivalent to boy or the girl. Then you look for the industry, the family, and then you also look for the economy as a whole. So it's a very resembling relationship, and I make it a point of emphasis that to the youth that in either of it is very common to whomsoever we like, we decide and we marry, and then we maybe we face the music for life. In the same way, sometimes we tend to buy the shares because maybe we like the name of the company, maybe just we feel like, for instance, I'll take an example. Sometimes the boys take up a girl believing this, that she is from let us say from a very poor background, and she will start following whatever I say. In the same way, in the stock market, anybody would go for a penny stock or a very cheap stock, believing that this will increase manifold. A share of 2 rupees would when increases, it may become 10, 20, 30, maybe thousands, and it will make a lot of fortune, which may or may not happen. So you have to be very careful before taking up a share. You have to understand that you need to know the company, industry, and economy. Now, I'll be discussing this in the present context. I'll not be getting into the details of company analysis, industry analysis, and economy analysis, but I try to emphasize on certain basic peripherals and the features which are actually taking place right now. So let us see a few things before that. The world has different experiences. For instance, the first recorded financial crisis comes from the Roman Empire. They used to have silver coins there, minting, but in the Mediterranean valleys, silver stocks have fallen, and then they started going for token currency. At that time, there was a little economic slowdown in the European Empire, in the Roman Empire, and in 284 AD, first recorded hyperinflation, because given the token currency, they started printing notes like anything. So this was the first ever recorded hyperinflation in the human history, which ultimately led to the fall of Roman Empire. Because then once money is into circulation, lots of token money, chasing a very few goods, people started switching towards trading only, thus leading to hyperinflation. Economy was further slowed down, and it led to further crisis, and the empire was destabilized. Then we can see a few more crises, very recent crises I have taken. I've taken the first one and the most recent, the Great Depression of 1930s. This is an era where you will find that the whole world actually, if you see that Great Depression and thereafter the Second World War, and then the whole of the world economic order has changed. The world has realized that it is not the nationhood, rather it is the global prosperity which will ultimately lead to human development. And therefore, we have started establishing international institutions. We have started helping out the ruined economies from the war. We had IMF, we had World Bank, we have UNCTAD, GATT, all those provisions were there. And this was to restructure the whole of the global world. So there was a massive change which perhaps at that time nobody had visualized before. I would just like to mention here that this was a crisis era when two persons, when the whole of the world was fighting, two great thinkers, Dexter White and Sir Keynes, they worked on developing the Bretton Woods Agreement. So maybe you need to be thinking with that paradigm in your life. Don't think that if it is a crisis hour, don't think that it is a panic hour. Try to visualize that what next? How are we going to react to the post-COVID scenario in this case? Then we had, so lots of changes you will observe after the Great Depression and the World War II. Then we had 1998-2000. What was the crisis? Anybody would mention that? 1998-2000. It was basically a digital crisis, IT-oriented crisis. Because the whole world, up to 98, whole world thought that everything would become digital. Anything and everything is information technology. And then the balloon was so much inflated, the stocks were so hyper that ultimately the markets collapsed. And there was no immediate change. The world came back to the basics of concrete and mortar business. But then it had an impact in the later part. And we see emergence of lots of e-commerce and IT-oriented and artificial intelligence and all those things. So a lot of infrastructure has been created during 98 or even a little before, which was later utilized by other organizations. Then we have 2008 financial crisis. And since it was very recent, I still remember lots of articles were there, almost a plethora of articles were there that the whole world would again readjust. And I think nothing substantial has changed. Financial crisis was there, the nations responded, and well, it worked out ultimately somehow. And the world started going like ever before. So these were the possible things. But let us make a small visit to the trends. I have taken 3 charts belonging to each one of these crises. So I have the first chart, this I am showing on the screen. It comes from the Great Depression of 1930s. And you will notice that it was in somewhere around 31. It was almost on the peak. And then it started sliding down a few months, then it jumped again, then it slided down, then it jumped again, then it slided down, and it touched its lower part almost in 1.5 years. It was not overnight. It took 1.5 years for the stock market to touch its bottom. That's one thing, right? And I would just come back to it. Are you convinced up to this point? Simple, I'm talking very simple fact that the stock market has not fallen in a single go. There was a substantial fall in the first lot, and then there was a little upward revision, and then again fall. And every fall was a little higher when compared to the previous fall. Okay. Now, again, you see the trend in the next 98-2001, and you will notice this again, that up to 2000, mid of or early quarter of 2000, you will find there had been a continuous rise in the stock market, but then it started falling. And then again, you will see that it was almost 2 years or so to touch the market at its lowest. The market reached to its lowest in next 2 years, not immediately. Then again, let us see the third instance, where again 2008. which was a real big crisis. It took around, say, 3-4 months still to touch its lowest, starting from September to, it took December to reach to end of November to reach its lowest in the market. And then you will find that this lower level was almost maintained for quite some time. So my question is, do you see a trend in all these three crises? I'm showing it again. Do you see a little pattern into all these three types? Yes or no in terms of falling? Down, up, down, up, down, up, down, up. Isn't it?
Yes,
Yes
sir.
or no?
Yes, sir. Everyone is saying yes.
That's great. So you are showing this into different phases, and there are things we really need to notice. This we have to understand, and I think history repeats itself. I'm very confident to conclude here at the moment that in all possibility that COVID onwards will also have an impact here, almost on the same pattern. I'm just trying to see, and I'll still give you reasons why I'm observing this and why I'm concluding this. I'm not concluding, but I'm just deliberating, and I'm just trying to ask you to think over it. That when all previous crises have a pattern, where in all the previous crises, see, the economies, or more precisely the stock market, had been able to revive over and again and then fall. Then revive, then fall. It was not a fall with one go, because the market do adjust. It falls, and then it considers that it has fallen beyond the limits. Then it rises. Then again it feels, no, the crisis is really serious, and then it falls further. Then it thinks again, okay, we have fallen too far. The share market is very cheap. Let us start buying, and then they start buying, and then they come up again. So this is a phenomenal thing. This is a similar thing across the crisis. So why it is an exception now, or why it should not be an exception now? We will discuss this, right? So is that comfortable with all of you right now? Yes or no? Or do you have some questions? We would like to stop here and ask for the questions, if any, relating to this. Endless questions will go at the end.
They're saying yes, sir.
Are you comfortable?
everyone-
Yes or no?
Yes, everybody's saying yes.
Okay, they are saying yes. Fine.
Yes.
Now the present crisis we come to, and so far we are finding two very strange phenomena: that there is no inflation and there is no panic in the stock markets possibly. This panic was only visible on 23rd March. And that week the market has fallen from, to as low as 25,000. And this was a phenomenon across the world. And since then, things have moved again. Now, is it normal? Is it desirable? Or is it somewhat strange, out of context? Is there a reason for an increase in the stock market, or there is something fishy? We need to discuss this. I'm just trying to put up certain arguments before you. I would not say, ultimately you have to think and decide that whether market is correct or not. It is your choice, because the perceptions differ. You may perceive something that I may not agree to. I may think something which you may not agree. And both of us have a right. Maybe either of us may be correct. I'm just discussing and sharing my viewpoint. Okay. So what is feeding stock markets? I would also come back to the first question, why there is no inflation, no hyperinflation at least. So why I'm addressing the second question first, why no panic in the stock market? What is feeding the stock market? Is it the regular investor? I doubt. The regular investor has already blocked his money he was active enough in the market. That is why the market was so good before 23rd March. And therefore, all the investors had a position in the market, and this COVID was an unforeseen thing which had just happened, and the markets have fallen. So the investors had already taken the position. So the present market spike is less likely to be feeded by the regular investors. Okay, then let us also see, are there enough good news? I doubt. I have very strong apprehension. Personally, I have not listened to any good news except that I am alive. So are you, and we are here on online. So the point is that there are not many good news from the economy point of view. Then is the future very promising? Again, I doubt. The future is likely to be bleak. We really don't know that how long COVID would take, how fast a vaccine would be developed. We really don't know when we would come back to the normal. And even we don't know that whether we would be able to come back to the normal at all or not. Are you in agreement with me? I have a strong feeling that we cannot visualize. We don't know really, because if we take a lesson from the Spanish flu, then it took more than 2 years and there was a relapse of the virus. I agree that now the present day scientific developments are much superior, much higher when compared to a century back. But still, I mean, virus could be even more powerful. So that's a possibility. And therefore, we cannot say that the immediate future at least is very promising. It is not. Then let us also see, are the corporate results expected to be good? Oh my God, this is the last thing perhaps that could have happened. I don't think. Let the results be declared now. The time is round the corner. Now the organizations will start declaring their results. And except barring a few of IT-oriented organizations like Amazon and others, eBay and all those things, you might be knowing better. So I don't think there will be good results from any of the organizations or companies. So the question, just ask yourself, okay, what is feeding the stock market? Where from this money? From somewhere the money is coming. You presume yourself that if you are an investor, you have parked your 10 lakh rupees in the market. Would you still invest right now? So these are the things which I have very, very, negative perception towards the market. So far, out of these issues, I don't find even a single penny coming to the stock market through these possibilities. Let us see a few points further. Is it corporate savings? Now, I think this could be one of the factors which is contributing to the stock market, because ultimately the corporates right now are not being able to function. So maybe they have diverted some of their savings, because the market has fallen very, very significantly in the third week of March. Very significant fall, and therefore the prices of the shares were set to be undervalued, and therefore the corporates, those are the business giants, they are smart enough, they must have just invested into shares. That's one possibility. Then second thing is it the government subsidies to the corporate sector which is being siphoned? Now, if any one of you, suppose I am being able to get some subsidy from the government, would I put that subsidy to my business right now when the business is blocked, where nothing is being manufactured, where nothing is almost being served? So would I put my money into business further? I doubt. I would either make some payments to my employees and other things, and maybe I would like to park my money into some profitable avenue. That's a second possibility. Third one is government is offering loans to the corporate sector. Again, just imagine that if you take loan right now, when your organization is possibly closed? What will you do with that loan? So I think these are, and one more point, bank money. The government has, the RBI has reduced the repo rate, and therefore facilitating a lot of liquidity to the banks. Now, do you think that banks would give money at the moment to the common man, to you and me, or to the industrialist, where nobody knows when the organization would open? Banks have not given money to these organizations, no way. And that is one of the reasons that why bank shares have jumped like anything in the last week. So lots of hordes of money, possibly, some of them, possibly, I'm not sure, I don't have an evidence. Some syndicates have been formed who, by pooling their resources, are possibly diverting the huge sums of money into the market. Because the first 5 factors, you will find that there is hardly any reason for the market to go up. There is a direct proportionate relationship between the GDP and the market. How can the markets can go up when the GDP is falling? I'll come to these points, but just think over it. And if suppose the last 4 points that I have mentioned, if this is the money coming to the stock market, then the first thing that they will be looking for is to book a profit at a reasonable rate. To book the profit at the earliest. They are not the regular investors in the market. They are the fundraisers. So that is there. Up to this point, you have any question relating to this section? Then I'll proceed further. Yes or no? If yes, please do ask. Again, I say that larger questions we can take at the end.
No, sir, there's no question.
Okay, thank you. Then let us talk about some of the factors which are taking place. Debt raising. Every country is already at the peak of its debt raising history. In 2008, there was a debt of around $84 trillion, which in 2020, 3 times $253 trillion is the debt outstanding to the world community. Then on average per capita debt is $32,500. If we convert this in terms of rupee at 75, it comes to 24,37,500 per person of debt. A common man doesn't know. Tell me, where from? Who is going to bear the interest burden? Who is going to bear the interest? Is it through taxes? And if taxes are going to be there, how would the economy grow? And if we don't charge, how are we going to pay and serve the debts and the interest thereof? And there is a possibility of default, especially with the developing countries. Today only I have got a news cutting where Government of India has decided to raise 4 lakh crores more. And 1/3 of the budgeted deficit has been used in the very first month of the current financial year. Now tell me, what is contributing to the stock market? Everything is negative. Every bit is negative. And still the stock market is rising across the world. By any method, by any measure, the economic indicators are not there, which could have supported the stock market. Now, one more thing, growth projections. S&P, Fitch, Goldman Sachs, they project a negative 5% growth. Numera suggests negative 5.2%. Moody suggests negative 0.2%. And Barclays suggests Zero. Barclay, being the most optimistic, says there will be a 0% growth in the GDP. Again, an indicator what will happen to the stock market. I'm not saying that the stock market could fall. I'm just sharing some basic fundamental information which affects the economy, and stock market prices should be a consequent to the economic growth or fall. So it is there. It is just before you. One of the organizations, Oxfam, projects that around $250 trillion are required to keep the developing economies just afloat. I mean, just to make them going, you need $250 trillion. Who is going to shell out that money? And if not, then if the projection says that it will be a troubling time for the developing world especially. How can we see? And why don't we see these factors? Why shouldn't we? Then let us see a few more things. Job market. I have read somewhere that only if I take just one industry, tourism, it used to claim for 10.4% of the total jobs in the country. And it is not only this industry. Try to understand. All your associated industries, all your associated culture is lost. There are tribes into many of the tourist places. If you go to the far east of India, a beautiful region, and tribes are there. If you visit Kerala, there are people living in the backwater areas, selling to the tourists. Their livelihood comes from them. They are all nowhere. And you are saying that the life is comfortable. My God, how can you think of that? Then aggregate demand is low. I'll just take an example of car industry. Do you know how many cars have been sold in April, May? It's a big zero. Yes, no company has been able to sell even a single car. Now, it is not only about the car industry. When the cars are not sold, then the related accessories and smaller businesses have lost the stream. Everything is gone. So this is another. Then disrupted supply chain management. Everybody knows. It is absolutely disturbed. Then US and many other countries, they are heavily printing the currency notes. See, on the one hand, it is very strange. I'm not against giving subsidy or the doles. But the point is that you are giving it to the industry at a point where they are not working. If you ask me, I personally as a teacher feel, as an academician feel, that this is the time where all the money should have diverted to the have-not section of the society, to the marginalized labor, to the and when we are now started opening up the economies, then perhaps we should have started giving them some incentives. But we have started doing it beforehand. The economy is locked and we are giving incentives to the industry. My God, it is strange. And therefore, now I would address back the first question, why there is no hyperinflation? Because of this very reason. Because the majority of the money has gone into the pockets of the corporate and industry sector rather than going to the common man who could have, in the first instance, demanded more money. No, the money has not reached to them. So therefore, this money has not contributed to the demand. Where it has created demand, it is being reflected. So it has created demand in the stock market by the industrialists who have got these benefits, not the marginalized labor, and therefore they are roaming on the roads, begging for the food. I have seen things with my own eyes. It's not just about social media. And any one of you, I'm sure, would endorse my point, who has seen them walking. Any human being would have wept, I believe. So they are not being able to contribute to the aggregate demand of the economy. Okay. So the point is, okay, shall we not enter into the market if the situation is so panicking, so pathetic? Am I comfortable till moment? Yes or no? Any observations? May I take a few minutes more? Yes or no?
So sure. Yes. Sure, sir. Yes.
Okay. So just one more slide. What is your opinion about the market now? Should you go to the market? Now I need your answers. Everyone, please. What is your opinion about the market now? Should you go to the market? Sam, please help me to know.
Sir, no. They are replying no. No, during the current situation, it is uncertain. Don't think so. Most of the responses are no.
Okay. Is there any yes also? When you are saying
Yes.
most, what does it mean?
One or two, yes.
One or two. Who are the names?
Ajay Acharya.
I
Mohsen.
congratulate them.
Yes, sir. And sir, Aram Shakil. Yes,
Okay,
sir.
there was some connectivity problem. Am I okay?
Yes, sir. You're audible and visible.
Okay, fine. Let me share the screen once again.
Okay, sir.
Where I am. Okay, here it is. Now, my opinion is that it is a once in a lifetime opportunity. But let us discuss how we are going to make it a once in a lifetime opportunity. How shall we see it? I have spoken so much bad about the market. Perhaps everything worst anybody could have imagined, I have mentioned here. And still I'm saying that once in a lifetime opportunity it is. I would prove that and I would show it to you. And let me tell you how we respond to the market, then we can make profits. The first thing is, don't just fall for any share. To the youth, I must say, don't fall for any girl or boy. Choose the best. That's very important. So the first thing that we need to understand is that, see, the share prices are low. Target not for the cheap shares, target for the good shares, good company. One of the best. Because whenever the stock market would pick up, they will be the leaders. I'll just come to it. I'll explain you about the company and the industry after this also. I think I'll take, there are certain hands raised. Just let me complete this slide and then I'll take questions. Then I'll push on to the next. Is that okay, please? Yes or no? Let me complete this slide.
Yes, sir. Yes, sir.
Okay. Then the second point that you should not do is don't feel moved. Move means missed out opportunity. Right now, many of the investors, money in their pocket, might be feeling that they have missed out the opportunity of the lower share price. The share market is continuously increasing. If the three graphs that I have shown you is any evidence, then this increase in the share price is temporary. And take my words that this fortnight there will be a substantial fall in the share price. So don't think that you have missed the opportunity. No, don't worry. The opportunity would come back to you. Rest assured. Keep your money tight. That's important. Then don't think that you can catch up the market at the lowest. Never ever think. If you have missed a bracket of 25,000 and you think that the market will not come back, then maybe 30,000 is enough, good enough. Buy it. But don't feel panicked. Don't think that you have missed the lowest market and therefore nothing would happen. It is not like that. Many of the common investors do it. When the share prices goes up, they start buying. And when it goes up, they buy still more. It's a very common practice amongst the common investors. Okay. Then another thing is, don't invest all your money in one go. Please make it a point to not to put in all your cash into a single go. That is not expected, not required. Then don't ever gamble in the market. That's not your cup of tea, my dear. Please refrain from the put and call options and futures. Don't get into that. I'm pretty confident, I'm pretty sure that your comfortable positioning and taking up the shares, buying the shares could be the right strategy rather than just gambling. It's not required. Then no short-term provision. Make it for sure that this is not the market which is going to go up into short run. If you have some work with your money, don't put it into the stock market. I'm recording this. I'll make this recording available on the YouTube. And maybe after some time you revisit this and try to see that how correct I was or how wrong, either way. So please, that's very important. Then don't think that you are the smartest in the market. What happens is you start thinking that you are the best person, you are the smartest one. Here I would tell you one example, one practical example. Do you know the biggest investor, stock market investor in the world? One of the richest man? Would you name it? Sam, please let me know.
Telling Warren Buffett.
That's very good. Warren Buffett is one of the top investors in the stock market. Do you know his position, his strategy at the moment? He has sold off majority of his shares. Majority of his shares. He has all the cash with him at the moment. He has liquidated all his investment, most of his investments, and is sitting with the cash because he is a person who knows that the market would go down still. There is a lot of potential in falling the market. That's there. Okay, then how do we invest? If this is so, then be a genuine investor. Don't be a gambler. If you really wish to invest, if you want to invest 100 rupees, do it. This is the right time. But right time at what? I mean, right when I'm saying this is the right time, not right now. I am foreseeing an immediate fall in near future. If the market falls, you pick up a good quality company, maybe just one share, maybe just two shares. And if it falls further, buy another share. So the average purchasing price will be somewhere in between. If it increases, I assure you, if you get a 15% margin, immediately sell it off. Book the profit, 15%, because share the price will again go down. It will take minimum of 6 months for the market to bottom out. Minimum of 6 months, I bet, maybe much more. So you are not going to miss the opportunity. Very recently, one of my students, he is very close to me, just like my son. He has purchased SBI at 150, sold it off at 177. Book the profit, 27 rupees in a week's time. Imagine the yearly return. So if you are a genuine investor, you should look at it. Make a company and industry analysis. I'll just, in the next slide, I'll discuss it in detail. Then take a long-term position only. This is highly advisable. See, you can move with some of the fluctuations right now, but largely your position should be a long-term thing. If you feel that maybe in a year's time, suppose I am at an age where it could be my daughter's marriage. So if I have some funds position for her, I should never ever put my 10 lakh rupees, which I might have, 10 lakh, 20 lakh, whatever, which I have for my daughter's marriage. I should not put it in the market right now, because the market may fall at any pace and then may not return to even the present level for a long time. But if it is a long time position, then of course market would increase sooner or later. So that is almost fact. Then learn to make a SIP, systematic investment plan. Start investing small money every month. If you want to invest 1 lakh rupee, start investing on any major fluctuation, small amount every month, maybe 5,000 rupees, maybe 1,000 rupees, maybe 100 rupees, whatever. But make it a spreaded investment over the period of time. Then another important thing, your cash is your biggest asset at the moment. This is my opinion, maybe. I'm sitting on all my cash that I might have. I'm not utilizing it anyway. I have not invested so far into any stock market. I'm waiting for a next fall. I am waiting. You have a choice. Then learn to float against the market. That is extremely important. That is what Warren Buffett does. Feel good when the market falls. Leave market when it rises. So given the crisis, when the market has risen, well, the Warren Buffett had quitted the market. He has encashed all his money and now he is waiting for the bad times. The moment bad things are announced, he'll feel good. And that is what I'm suggesting you. That feel good when the market falls and leave market when it rises. And the last thing is set your targets and encash as soon as you reach your targets. Our problem is that when the share prices start increasing in place of cashing it, we start feeling like that we are the smartest in the market. We have taken a share which has risen double-fold. Oh, I had been so smart. No, the last don't is, don't think that you are the smartest in the market. A moment has come, please encash it. Now, let us go for the questions before we proceed further. I'll just take 10 minutes more. Now, but at this point, I think you might be having lots of questions. Sam, please help me to get the questions. Should I close the, for a moment, can I close the screen?
Yes. Just a
Okay.
second.
Let me just close it.
Yes, sir. Sure.
How do we do it, Sam?
I'm doing it.
Stop share. Okay. Okay. Fine. Now I'm back with the chats. So many chats, my God. Okay. Let me have, thank you. So many yes and no and I don't know what for. So let us come up with the questions. We have so many questions. Let me see. There is no any vaccine found yet in COVID-19, but our market is progressing after the lockdown. What will happen when there would be a situation like America, because the cases is increasing day by day? I have just already discussed this, that the market is being boosted like anything. It seems to be an effort of operators and the syndicates. Sometimes you are a management student, you may be knowing that sometimes cartels are formed. They create a sort of syndicates because they know that they can only sell out together. Individually, they all would drown. So that is there. And then we have if we have some more questions, what is the minimum age of investing in the stock market? There is no age bar in the market. What is the normal investor? A layman should invest money in the market or hold his money for even bad days anticipated. I think Shah Saab, I have responded to this question very openly and frankly. My opinion is that we can hold on a little, and then perhaps from the investor's point of view, better opportunities are going to come. This is what I feel. I'm not recommending. And then we buy shares because the prices are low. They'll grow after some time, not some time after a long period of time. This is what I believe. Then as an individual, how we take steps to save our economic health, let the government save the economic health of the country. I believe at the moment, as an individual, if you are asking, then try to contribute your best. That is the honest contribution that we can make. It should not be like, if Purohit has asked me to deliver a talk, it should not be like, anything I can talk. No, I should try to give my best, and that is the best contribution to the nation. And we should leave the market, then it falls. Should we leave the market when it falls? Absolutely not. That is the worst thing possibly we do often. Not advisable. Whenever the market is falling, try to build up and buy more shares, because in that case you would average out the price, and whenever the market revises, it will pick up very fast. And when to buy shares, then this is a very personal decision, but I think I will buy in the next fall. Whenever the market falls again, I would make a buy, and that too around 10% of the investment that I'm targeting for. This is my strategy I'm sharing. Okay. Then next, what is the future of unorganized sector and unorganized labor post-COVID-19? Please throw some light. We can take it up at the end, because it's a different dynamics. It's a different thing, but by and large, organized sector, as I see, briefly I can say that they'll face the tough time, because I don't think they have enough cash at their disposal, enough resources at their disposal to continue. And should people stop their SIP during COVID or not? Again, it is a personal decision, but I think when the market is very low, making a small SIP could be a good strategy. Investing at a lower prices could be a very good strategy. Is there any ratio of stock market investment to our income? Okay, we are keep on giving students asking this type of question. Can we buy a small number of shares? Of course, we should buy a very small number of shares, very small number, maybe just one share at a time. And if the share price, I'm just taking a very simple example. Suppose I have 1,000 rupees to invest. I buy a share for, let us say 400 rupees. Now, in the bank, if I keep this 400 rupees, or let us say 1,000 rupees, after a year, I'll get 6% return. So 60 rupees possibly I'll get. So if 400 rupees I invest and share price goes to, let us say, 450. So actually I have made a bigger profit than what I would have made by investing 1,000 rupees in a bank for a year, because this has been done in a month. But if the price goes down, let us say it becomes 400 to 350. And if I buy one more share of 350, then the average price becomes 375 for 2 shares that I have. So that could be one of the strategies, but don't put all your money in one go. That's very important. Okay, so I think we'll keep on getting questions. Organized sector affects the stock market prices. Well, nobody can guarantee, there are no evidences, but the organized sector is one which has a lot of money, lots of cash. So I think they have the power and strength to do it. Is it okay to invest in gold in the present market condition? That's one thing that depends on the temperament of an investor. Gold is a good option. Yes, you have the real commodity with you, but over the period of time, different calculations say that share market has the potential of giving you the best possible returns. Okay, then we have so many things in chat box also. Said there's a difficulty to attract shareholders to buy the shares. So what can I do? So, okay, gentlemen, we have somebody. The name is not mentioned. Is asking that the share they are not being able to attract shareholders. Why to attract shareholders? Just be honest with them. If you are a dealer, and ask them to hold on, and then share price post-COVID, we have already discussed. How many shares can we buy? That is your choice, your budget, your money. Yes, of course, there is a question that leave the market when it rises. Yes, strongly recommend. Make your target. See, you cannot make endless money. Let us understand this. What percentage you want to make? Once that is achieved, do it. Or you have it in terms of you have the target in terms of time. Okay, next 10 years, next 5 years, I'm blocking this money. I'll forget it. Then at large the economy would grow. Is that okay? Largely? Should I proceed further? Yes? Am I allowed?
Yes, sir.
Okay, okay. Thank you, thank you. I'll just go back to my screen and just now this is also very important. You see, while we are investing, when I'm saying that the share prices have fallen or would still fall, still you have to be very careful about choosing the industry that you are going to take up. For instance, if you see, if you are aware with the things, and I'm just flagging, for instance, tourism industry, I don't see much potential even in near future. I'm a very, very, very thorough tourist. I believe in edutourism. Anywhere a conference I find and I go. Last year I had been to China for a month with my family. I do go. I had been to every part of the country almost. I have seen India thoroughly, right from Kashmir to Kanyakumari and Meghalaya to Ahmedabad. All the places I had been to. But right now, I don't think that another 2 years I'm going to go anywhere. Less likely. Less likely. I'm not sure. Maybe at the moment I'm overreacting, but I'll not go. Or aviation industry. Nobody can suggest you to go for the aviation industry. I don't think in that in very near. I mean, there are so many examples, and there are so many examples otherwise as well. For instance, IT, artificial intelligence, e-commerce. These are the huge possibilities which are likely to have a jump, a quantum jump. And I think they have recorded huge profits during this period. Zoom itself is an example. From almost nowhere, it has jumped to the list of Forbes. They have made huge business. I have taken this professional version of it, and therefore we are talking comfortably. Otherwise, they have a limit of 40 minutes. So you need to be able to identify the right industry, which industry to take. And once you decide about the industry, then you also make a company, which company to take. So every company is not going to deliver. For instance, telecom industry and Jio is an obvious thing, not Idea or Vodafone. I mean, this is my personal feeling. I'm taking names. I'm just sharing my things, my observations. Jio right now has an edge. So the same industry, but some companies have greater potential than other ones. This is largely what I had to say. Then all the thanks to School of Management, Doon University of Dehradun, Professor Prohit, Smita, and all the esteemed attendees. Thank you very much. Now, any more question, I'm open. You have a right either to leave or to continue talking. I'm here at your disposal. Let me respond to Shweta. Shweta, you have done your market, your internship with some organization, trading market, and you are supposed to open the account and other things. Please better try to be honest with your customers. Never go for small gains. Then you will have a lifetime relationship with your investors. And very often people who have money don't have time. So if you are able to connect and build up that relationship, I think that would immensely benefit you in the long run. So Prohit Sahib is there indicating me to leave the Thank you very much for giving me this opportunity.
Thank you very much, sir. Thank you for your very informative and very detailed and analytical study. You have covered a worldwide recession from 1930s to 2020, almost 1 century you have covered, and analytically you have examined and explained the participants and attendees, all the students and scholars, faculties are benefited with the method and with the wisdom of your analysis. Very sharply you have analyzed, and I'm thankful to you that you have also covered the 20 lakh crore package declared by Honorable Prime Minister, and how this package, this subsidy, bank SME sector, how we can take advantage from core sector to the share market promote, and moreover the investment planning. You have don't and do's, you analyzed and you briefed. Thank you, sir. Thank you very much. And I'm sure that we would like to have your more session in the days to come. I request Dr. Smita Tripathi to fix your one more.
Can I just add one thing? Prohit
Yes,
sir,
sir, yes.
can I just add one thing?
Sure, sir.
We are going to have another session on stock market on 11th or 12th. We will inform, or most probably on 11th, we will advertise that, and that will be a more technical session. 11th June, we will have next session, where the Faculty of Commerce will organize this, and I would request all the attendees to do participate if you feel like. Thank you very much.
Right, sir. Right, sir. If you will share this link, sir, then definitely we will circulate and we
sure,
request
sir.
all the. Yes.
Purohit ji se bach ke kahan jaunga?
Thank you, sir. Thank you very much. And I must congratulate Dr. Smita Tripathi for inviting you for hosting this session, and it was really very useful, sir, in this pandemic situation where nothing is good news is not there, but you at least you have analyzed and you have briefed us. Thank you, sir. Thank you very much. Over to Smita.
Okay, thank you, sir. Thank you, Purohit sir. So good afternoon, everyone. It is my privilege to have been asked to propose vote of thanks on this occasion. I, Dr. Smita, on the behalf of a School of Management, Doon University, extend a very hearty vote of thanks to Professor Imran Saleem, sir, who blessed us with his word of wisdom. I must mention our deep sense of gratitude to his work. I especially like his discussion about most vital decision, phases of financial crisis, and do's and don'ts of a stock market. The way he explained the topic is exemplary. I also express my gratitude to Professor H.C. Purohit sir, HOD, for giving me an opportunity to organize the event and his continuous support. I heartily congratulate to all the participants for their active participation who made this event lively. Thank you all. Thank you. So I'm concluding. Thank you. Thank you, sir.
Thank you very much.